Morning, guys. Just wanted to go through some of the headlines today because that's markets getting pushed around today. A lot of volatility compared to the rest of the week, but this was a fun headline. Having just filled my car up yesterday, which costed over 100 Aussie dollars. It's happening the same in the UK, and they're squealing like stuck pigs about it. Just as we have before too, and the Australian government lowered the fuel tax. But yeah, that's a lot of money to get around if you need to. More importantly though, just looking at the summary here from Forex Live, one of my favourite pages, risk sentiment deteriorated sharply, and there's certainly the fraction of excuse me, the fraction of European Union. You've got the pigs, which is Portugal, Italy, Greece and Spain. The Mediterranean coastal countries are certainly the weaker ones of the European Union, and their interest rates are skyrocketing, and that's they're talking about that fragmentation. And in the meeting with or in the ECB conference, that fragmentation was a key issue, and she hasn't got any resolution for it. Just continued to sort of put the head in the sand. So the euro got sold off on that basis. But Adam makes a fair point further down here, that there's a clear pattern where currencies aren't rewarded for raising interest rates. With the RBA, we had the spike in the Aussie dollar, but it is now heading the other direction. ECB, BOC also also struggling to find any or attract any strength on the back of rising interest rates. Not sure if that's a major issue for export countries like Australia. If our currency is lower, then it makes our goods cheaper, and China would certainly like to buy up some more, so that's good for the economy, really. Whilst in this risk-off period, the US dollar seems to be dominating. Even the yen here is back up towards its 20-year high. So, and the cable, which we noted yesterday was doing pretty well, is back off. However, tomorrow we've got, we have the CPI, US CPI. Also note that jobs claims, the number of people asking for money from the US government spiked, which is a bit of sort of opposite to what the unemployment figures last week were indicating. So that's a bit of interest. So the macro data coming to zero hedge, another one of my favourites. Pretty ugly data, ugly claims print, ECB hawkishness-ish. And stocks closed on their lows. The market really got spanked. Financials and techs were hit, but he makes a point. Does anyone get the sense that this directional huge reversal higher on the CPI, i.e. that the CPI print will come in lower and therefore stocks will have a bounce? I don't know about that. The zero hedge like to be kind of satirical in a way, and I'm not sure that they're going to get a weak CPI. And if it does and the market bounces, then you'd have to start thinking about it, the conspiracy of the market manipulation. Whatever it takes to love the pigs. Euro responded by heading lower. ECB, they did say that they're going to raise by 25 basis points. People then came out and said they should raise it by 50, but at the next meeting in July they're going to be raising interest rates, and they think that's a good thing. Don't know. They've painted themselves in the hole since 2008. Everybody has. And inflation was too low because you're printing money. Now you're paying for that, really. Interestingly, gold and Bitcoin, the sort of go-to safe haven assets, done nothing. Oil was a little bit lower, but natural gas spiked again, and I'll go through the charts on that. Over in the US, gas prices hit $5 for the first time in history, but when you adjust for inflation, it's still below 2008's peak. There's a terminal fire in Freeport, so natural gas prices bounced a bit. Yeah, so that's a bit of look at the fundamentals and what's driving prices. So we'll go and have a look at the prices across the majors. With clearly the US dollar, Aussie broke out of that. I missed it. I was away doing something when it broke out of that. I was looking at it on to trade it on the hourly time frame, and it broke there. I missed that opportunity. Bit of a shame, but can't be in front of screens 24 hours a day. But yeah, US dollar clearly dominating, as we said. The dollar index should be looking to rotate higher off that, and we can see that against all the majors that the US dollar, Canadian currency pretty weak there. US dollar dominating against all the pairs. Big bearish engulfing bar now on the euro, and it should rotate down to those lows again. So over in stocks, we can see there's that Nikkei trade that we were looking at yesterday. We got into that, but yeah, stocks across the globe are getting smashed. So you've got the S&P 500, Nasdaq, Aussie 200, the DAX, the Nikkei, the FTSE, China, Euro, and VIX is starting to spike again. So yeah, that's clearly risk-off sentiment, and the US dollar is the major beneficiary of that. Commodities, we'll just have a quick look at that. Natural gas, as mentioned, so had a bit of a bounce, but the rest of them, not much, which is surprising. Copper off a little, also a bit surprising, but these ones, the precious metals, you'd think they'd be getting some sort of attention as a safe haven flow, but not really, well, not yet anyway. So maybe today's sell-off hasn't really sparked panic yet. When you look at the stocks, we're not at new lows, so maybe today's sell-off is not panic driven just yet, but I suspect that we'll get to that in due course. There will be panic. We'll just quickly flick through some of these crosses. So looking for trading opportunities, some of the trends such as the Aussie or the US dollar one have already been there, and we've missed yen a little bit stronger. If we go and look at the yen pairs, it's outperformed all its peers apart from the US, certainly gaining against all the majors, or maybe not against the pound. Too far gone to try and trade that. CAD, I don't see, kind of mid-cycle across all of those Swissies. I don't trade that. I'm trying to avoid the Swiss like the plague. Euro dollar. It's a bit messy. I think we're doing well, but in the euro dollar that we're in, and we'll just maintain that one. And sterling crosses. Not much there today either, so I think it's more about managing the trades that we've got on, rather than trying to sort of jump in, or if you're wanting to look for a trade today, shorter time frames such as the Aussie's clearly in a trend, then the Euro's clearly in a trend, even the dollar index. But if you're trading the shorter time frames, you should really only focus on the four majors. because the liquidity is and pip size is best bang for your buck, to be honest. But you could look at the shorter time frames on these and maybe get an opportunity in that zone there. But that's it for today. I hope you enjoyed it, and we'll see you next time. Thanks.